Hello, everybody. It is the 20th of January 2025. We have literally just seen the inauguration of the 47th President of the United States of America, Donald J. Trump, together with J.D. Vance. That happened 3 hours and 26 minutes ago. And today I am with our dear friend Akhil Patel. And what we're going to do here is talk about what we think lies ahead. We'll have a fireside chat with Akhil. He'll talk to us about the 18.6-year cycle and a bunch of other stuff. And we're also going to talk about the inauguration and have a good chat with about that. So before we kick off, let me introduce you. You don't, most of you, pretty much all of you will know him, but he is the author of this book here, The Secret Wealth Advantage. Now, you've got to get this. This explains every part of the cycle, but he's not just the author of that. He's a tremendously able and intelligent man. He is also director of property share market economics there together with our friend Phil Anderson. So, Akhil, welcome. And
Hi, Andy.
thank you for joining us. Thank you for agreeing to come along. And yeah, what lies ahead? What do you think's going on? Where do we start? Should we start off with the 18 cycle? Yeah. Or should we start off with Trump? What should we start off with? What an inauguration. So
yeah, okay. Well, let's say a couple of words about Trump. But first of all, thank you so much for having me. It's always really good to be on your show. Always enjoy our chats. And I think 2024 was an interesting year. I think 2025 is going to be even more interesting. So let's see how the next 12 months play out.
Right. Well, actually, let's talk about that, because we spoke this time last year and you nailed it. You nailed it for 2024, didn't you? That was spot on. You got the stock market, exactly what happened. And that you got the economic cycle. I think you nailed it all, or you're too modest to say you did, right?
Yeah, no, I think last year it was a pretty good sort of forecast. You know, we put out a forecast for our subscribers. As you say, the stock market kind of behaved as we thought it would. You know, we read the 18.6-year real estate, but I call it really the economic cycle. We're kind of fairly close to the peak. And so you get pretty strong years in the economy. And I think this has been a consistent theme over the last 2 to 3 years that, you know, for example, in 2023, everyone was expecting a recession, didn't happen. In fact, the US economy has gone from strength to strength in many ways. I know it's not totally equally distributed. And I expect to see more of the same, probably more of the same with kind of a speculative air about all the things. You notice that, and starting with Trump, he released a meme coin over the weekend, which I think until some point yesterday had appreciated about 60 billion in the space of about 2 or 3 days.
Was it as much as that? I knew it really raised up.
Who knows? I don't think anyone knows. It sort of depends upon the second at which you start counting. Because then, I mean, and as probably a sign, as a taste of the craziness, silliness, whatever you want to call it, of the times, Melania introduced her own meme coin, causing the value of Donald's meme coin to kind of pretty significantly fall in value, which I thought was quite funny.
That's a typical marriage, isn't it? That's
typical marriage, yes. And always listen to your wife, I suppose, is the lesson from that.
Right. Yeah. So let's have actually let's go into the 18.6-year cycle first, and then we can then overlay that with what we've heard in that quite incredible speech that Trump made just as I say 3.5 hours ago. So tell us what you're foreseeing for the year 2025, and you know, and spin it out, go into detail, because not everybody's watched is fully familiar with your work, certainly from the people that watch this channel.
Yeah, okay. I mean, you know, we could go through a little diagram which sort of illustrates the cycle. I don't know if you've got it handy. We could sort of bring it up and I could talk people through it so that we're all on the same page in terms of what you know, how it's sort of structured and where we are. So for those of you who haven't heard me speak before, haven't heard me talk about the 18.6-year cycle, it's the economic cycle, and it basically explains the passage of the US economy from, you know, the kind of end of the last crisis through an expansion to the boom to the bust phase. And it's sort of 18 years in length on average, and actually with very little variation. It's been going on since about 1800 when the US started selling off its land after the War of Independence and the creation of the federal government and the kind of expansionist policies that were put in place. And so the only things that have interrupted the cycle over that sort of more than 200-year span have been the two world wars. Apart from that, the cycle has been almost like clockwork. The current cycle,
if I may ask you there, Akhil, you
yeah.
mentioned that there was a degree of disruption during the two world wars.
Yeah.
Was that translation of the cycle, or was it just sort of, the cycle just ceased, and then how soon did it take for it to realign, to get back into phase?
Yeah, I mean, that's a very good question. So probably the First World War was more of it sort of dampened things for a few years. The US entered the First World War in 1917, and of course it ended in 1918, so it wasn't quite as disruptive. And that cycle sort of started around 1911 and peaked around 1926. Now, the cycle peaked in 1926. The stock market had a couple of additional good years for reasons that we might come on to actually later in this fireside chat. But then, of course, we had the thing come crashing down in the 1930s. Now, what happened after that is the cycle began again around 1932 and sort of was ticking along till about 1937, 1938. And then it does appear that after that, the enormous disruption with the start of the war in Europe, America entering in 1941, basically stopped the cycle. And it didn't sort of reset itself until demobilization, until the reconstruction of Europe, and the sort of efforts to reconstruct Japan started again. So they completed, and the cycle could start again around sort of early to mid 50s. And then you got the 18-year phase again. And so we got a peak in around 1972, had a major crisis in 73, had a stock market low in 74. The cycle started again in the late 70s, running up into a peak in 89, 90. We had a sort of fairly significant recession in the early 90s, which people don't remember, but partly because the stock market didn't come down quite so much. But if you remember those times, the early 90s was a pretty significant recession. It cost George H.W. Bush the election of 92 and so on. So significant. But it was sort of bound up with the fact that the Berlin Wall had come down. There's a bit of a peace dividend, et cetera, et cetera. Anyway, the cycle started again, and we know it peaked in 2006, and we had the financial crisis of 2007, 2008. And that brings us to the present cycle, which started around 2012. And the way that the cycle works is it's 14 years up and 4 years down. And the 14 years up is sort of basically in two halves of expansion of around 7 years approximately, interrupted by a mid-cycle recession. We got the mid-cycle peak around 2019. The bond yield curve inverted around 2019. The global economy was slowing. The higher interest rates, Trump's trade policies, etc., were slowing the global economy. And we got the start of what would have been a pretty minor recession that was then exacerbated by COVID in 2020. But actually, COVID probably was the reason why it ended up being the shortest recession in US history at 4 months. We had massive stimulus out of COVID. We had a big couple of years after 2020, and things started up again. What you tend to find in the second half of the cycle are several themes. You find looser monetary and fiscal policy, i.e. massive stimulus, really low interest rates, huge spending on things like infrastructure, which we've had not just in America, but in Europe, in Japan, in China's doing that, in Africa and Eurasia and so on. That tends to mean a commodities boom. Doesn't mean all commodities are going up at the same time, at the same extent, and so on. We can talk about commodities in China a bit later if you wanted to. And then the final couple of years is where things really, really take off. And it's what I call the era of very easy money. And this is where not the government so much printing money as the private banking system really going ahead and printing a lot of money and people speculating very wildly and so on. And that phase, which some people have called the winner's curse phase, in my book I call the mania phase, is really kind of over the top speculation. Nominal GDP numbers look quite good, but the economy is actually getting weaker as you get towards the peak. And we're expecting the peak to be sometime next year, 14 years after the cycle started. And after that, at some point, you should find some pretty difficult times if history is to repeat. Now, I mentioned the 1920s. The peak was in 1926, but you didn't really get the stock market crash until 1929. So it means that you don't necessarily get the crisis immediately after the peak. We had the peak in the last cycle at 2006, but the financial crisis was really centered in 2008. But nonetheless, if you know what you're looking for, you can see the sort of dominoes line up, and then you can see when the whole thing starts to fall apart. And that usually brings down the entire sort of banking system. It means that the economy is effectively in a depression, i.e. below long-term growth, and so on. And it takes quite a number of years for that to be sorted out, often around 4 years on average. And so that is kind of where the outlook is towards the end of the decade. The yellow dot represents where we are now. So we are really entering the real speculative manic phase of the cycle. And so today, Donald Trump inaugurating a golden age of America. Well, I beg to differ. It's going to look in some ways quite golden, but it's golden if you own assets, if you're speculative, if you're willing to behave in crazy ways. I think fundamentally the US economy will, behind the scenes, be getting weaker because this cycle is driven by land values, and land values are unsustainably high. And at some point, the whole thing is going to come apart. And actually, it's likely to happen under President Trump's watch. And in fact,
ironic because he is, his background and from his father is, it's all in real estate and land, isn't it?
This is the great irony. Trump has been, shall we say, shafted by the cycle on 2 separate occasions, and he seems not to have learned from history. Certainly, if he's not exercising a bit of caution, or indeed putting in place policies that might ameliorate the worst effects of the coming downturn. I mean, we all know, I think, the story of the 80s. He was a really big guy. He actually contemplated running for president around that time, and in fact, he would have been on the Democratic ticket. So he's not by any means a ideological Republican. I mean, as with most politicians, I think they're ultimately motivated by power, and so you can join whatever party seems to be the best route to that. He was very much burnt by the 80s boom. He had to be bailed out in the 90s. It's unclear who bailed him out, but no banks in America would touch him. And I sort of talk about this in a little bit of detail in my book. A lot of money was coming out of Russia after the fall of the Berlin Wall. They needed to go somewhere. And the suspicion is, and this has actually been documented by some pretty, impeccable journalists in terms of their quality, as, Donald Trump would have been one of a number of people in need of funds that would have been helped by Russian money. In any case, he had a pretty big cycle after that. He'd moved into reality TV and all that sort of thing, The Apprentice and so on. But he was doing kind of deals in Dubai, and this massive complex was supposed to be built, didn't get built. In fact, I think the Trump organizations announced something else in, if I'm not mistaken, Saudi Arabia, completing in 27 or 26 or something like that. So again, timing is repeating.
Tallest building announcement, then, and we've got all this massive building going on in Saudi, haven't we?
We do, and this is, I mean, I've sort of hinted at it. So it's a real estate cycle. It's driven by land values. Land is the most important factor of production in an economy, and so it's really an economic cycle. When land values are going up, you can pretty much do anything, and the economy will be okay. When land values are coming down, as they are at the end of the cycle, you can pretty much do anything, and you just won't know how to solve it. And one of the reasons why the tall building is such a marker of the cycle is because it requires 3 things to make it work. One is you need to have an era of, great optimism, and you think it makes sense to build really high. You need high land prices such that building higher provides a return on investment. And of course, you need lots of easy money because these things are financed on credit. And so all these things come together towards the peak of the cycle, which is why you've seen a slew of announcements of the world's tallest this, the world's longest that, the world's deepest this. I think Dubai have set up a dedicated Web3 17-story building. You see kind of record-breaking things like this all kind of appearing towards the peak of the cycle, and certainly this cycle has been no different. And so, as I said at the start, it's going to be a very interesting few 2025 into 2026 to see what's going to come out. You've obviously, at the inauguration, you had all the tech billionaires lined up behind him. Elon Musk in particular, wants to stick a man on Mars. He wants deregulation so he can roll out autonomous vehicles and all the other things. It's going to be a really interesting couple of years. Who knows what kind of stuff is going to come out? But unfortunately, history will repeat at some point, and it won't last forever.
In fact, if I just come in on there, I was just presenting last week to the foundation, and one of the things there that, well, actually, I'd like to back that up with a couple of observations, which so you're talking about a high in 2026 in this cycle, but the stock market crash last time came 3 years later. Well, 2029 is going to be 100 years on from. I look at the other cycles. I look at the whole cycle as well. Obviously, that's going to be 100 years on from the 1929 crash. So I think it's going to be a significant point there, and not only that, it's going to be the 90-year cycle on from the commencement of the Second World. So we're going to see some interesting things there. But
I mean, sorry, I just wanted to ask about that because I've talked quite quite mechanically about the economy and to a certain extent about markets, but I think, and I've seen in some of your writings, you talk about the politics and the kind of mood and of things as well repeating, and I mean, you can certainly see that. The kind of air of the 1930s, a sort of increasing fragmentation of the global economy, and let's face it. I mean, we're not really in the 30s in terms of some of the really dark stuff, but it's also not a particularly nice time, and we're not, the rhetoric around things like immigration. Now, I don't really want to talk politics, but the rhetoric around some of these things is really, in some cases, maybe not in America so much, but in parts of Europe, really quite nasty. And that seems to be very clear, sort of 90-year cyclical repeat. But I mean, you probably know a bit more about that than I do.
One of the things that my followers have been aware of is, you're absolutely right, and we're talking about these as concepts. Let's not say we don't talk politics. We're talking cycles. We're talking about how human behavior repeats, and certainly from my point of view, and I think pretty much from your point of view, we're apolitical. We're just observers. But yeah, this is exactly it. And I wrote about this back several years ago. In fact, I first started writing about it in 2015-16, and the overlay really is this idea of in the case of the early 1930s, Germany and the reparations from the Great War being the only war, well, the First World War was so great it was destroying the nation economically, and Hindenburg was a weak chancellor. Hitler saw his opportunity, and it slowly accelerated. You've only got to look at that 90-year overlay pretty much to the month, and you can see how these kind of more right orientated, or people use the word far right too much this moment, but you can see it is creeping in. We're now in 2025, and if we look at this, if we just the 90-year overlay that I was talking about leading into the outbreak of the Second World War in 1939, there are certainly overtones there. The history rhymes more than it repeats. So there it is. And immigration has been a constant source, especially in America. It really does come in these waves, and so and this, what happened. Just the other thing I just wanted to add when we're talking about the tall buildings, I spend a lot of time in New York with work and my clients, and the Chrysler Building and the Empire State Building were starting to be constructed in the late Roaring '20s.
They were, yeah. And the feature of the tall buildings is they are always open during the subsequent recession. They can't find any tenants to occupy them. And actually, we have some very good examples. So the Empire State Building opened in 31 and was called the Empty State Building for quite some time.
Of course, yeah.
A more modern example is the Shard in London, which when it was opened, I think in 2012, had to be repurposed. So at the time, it was Europe's tallest building, had to be repurposed. So it was office space mainly. But then they managed to persuade Shangri-La to open a hotel. But the hotel was occupying spaces that were originally designed for offices. And so they have, quite high ceilings for a hotel room, for example. more in line with office space. So it's kind of interesting quirks like this that you see with this. Burj Khalifa was called the Burj Dubai, but Dubai had to be bailed out by neighboring Abu Dhabi, so it was named after its ruler of Abu Dhabi. So things like this, sort of the signposts and indications of a cycle which has gone wrong and has sort of fallen down and required sort of bailing out and stuff.
Yeah, in fact, I'm just now you mentioned I wasn't familiar with the story of the Shard. So, I do a while back I had some serious medical situations, and I actually went to see a doctor who was based in a whole medical practice that was in the Shard, and I was totally amazed, thinking that's the first time I ever went there. Probably about 10, 12 years ago. Yeah. So yeah, so these things are quite fascinating. Sorry, I've derailed you. Yeah, we were talking about the socio-economic mood and this idea of this move to the right in the 90-year cycle playing out in parts of, certainly in Europe. And we're seeing this other thing. Actually, the other thing I wanted to bring in whilst we were talking about this is this modern day revolution, which again, my people are familiar with, where we do see this 82 to 84 year cycle. And that really came to a head in 2015, 2016, following on from the rise of Hitler. And then the previous cycle took us back to Karl Marx and the Communist Manifesto. And the revolutions across Europe in 1848 and the previous one, the American Revolution. But coming back round about that point, we saw the arrival, we saw Brexit, which, we went from globalization to polarization. We saw Brexit and we saw Nigel Farage perpetuate that or act as a catalyst for it. And we saw Trump 1.0, didn't we, in 2016? So so that's that. And then and the 82 to 84 cycle has now gone into the 90-year cycle. But back to you, because I mean, I know we're throwing ideas around.
Yeah, we are. No, this is good. Actually, I saw the Brexit just while we're on that. I saw the Brexit thing as a 60-year repeat of the Suez Crisis, which the Suez Crisis I mean, I don't know most of your listeners are potentially American, they might not have remembered it. It was actually American in design in a sense that the Egyptians nationalized the Suez Canal, which had sort of been operated or was for the benefit, at least when it was built, for the benefit of the British Empire, sort of getting short shipping times off to the Indian Ocean, where of course a lot of British interests were. Sort of important economic artery for the United Kingdom and Western Europe. The Egyptians nationalized it. The UK and France and I think Israel sent forces to reclaim it, or I don't know if that's the right word, but nonetheless to reclaim it. But of course, in the post-Second World War order, when the UK didn't have India, and a lot of UK power projection was done by the Indian Army in the Indian Ocean. The UK sent its forces and got soundly beaten, partly because the Americans were not in support and basically withdrew support, threatened to do lots of horrible things to sterling and so on. And the UK was obviously in a very weak position at the time. And so it actually indicated to everyone, it was probably obvious to other people, but it indicated to everyone that the UK was no longer a global power as it had been. And you can argue in some ways that Europe is increasingly challenged anyway as a concept, but with UK in it, it was, obviously stronger, and the UK was arguably stronger for its place within Europe, but it signaled a very decisive turn in a different direction 60 years on. So I think that's kind of quite an interesting kind of rhyming of history, if you ask me.
That's an interesting. I've never thought of that particular option, relating it back to the Suez Canal. But just two points I'd like to add to this: the Brexit crisis. If we go back 45 years to the exact day that the Brexit referendum took place in England, to the day, that was the day when the French finally dropped their opposition to England, to Britain joining what was known as the Common Market, then the EEC. That was the date, 45 years to the day. But you double that cycle up, and what do we see then? There was lots of division within the League of Nations that was formed after the First World War. And 90 years to the month, the opposition, it had been Germany that had been controlling everything. Well, that was a familiar story, just back in 2016. Germany was too strong within the European Union. So that was the 90 and 45-year cycles I was looking at. And so that I thought was important. And the other thing you mentioned about Britain, up until the Second World War, Britannia ruled the waves. It was off the back, exactly as you said, of colonialism, the British Empire in India, especially, where we both hail from, and that's where we speak such good English, Akhil. So, no, joking apart, all about Britannia ruled the waves. That was it. Okay, and America was acutely aware of the dominance of Britain, but it was on the rise. Okay. And it was for that reason America attempted to remain neutral in these global conflicts. And it was only once, and that's why America didn't join the Second World War till 1941, because they had a policy of neutrality until they were forced into it when the Japanese invaded Pearl Harbor. So that was a point I wanted to make, and that was the opportunity then for America to overtake Britain as a leading empire. So that was the point I wanted to make. Sorry about that.
Okay, all right. Yes, I mean that's absolutely right. Yeah, no, I think there are a lot of sort of interesting cycles that come in around Brexit. It was, if I'm not mistaken, the 72nd year after the end of the Second World War. Okay. And you could argue so that was a defeat of Germany, but you could argue that the UK was, at least in terms of its global position, a big loser from the Second World War because it was economically bankrupt. It couldn't keep any of its empire together. It was very much dependent upon the US. The US forced it to, forced all of its sort of colonies off this, the sterling standard. And so on. It kind of disrupted the UK's control of oil supplies, which was a very important source of, finance, and so on. So you could argue, in many ways, in a relative sense, the UK lost the Second World War. And while I'm not saying that the UK lost anything out of Brexit necessarily, but it has some sort of resonance with it losing its international standing to a certain extent. And being in I think it'd be fair to say even the most ardent Brexit fans would say that we haven't exactly showcased the best of ourselves since 2016, for a number of reasons. Some of it might be poor policy. Some of it might be we spent the last 7 years, probably, and actually now close to 10 years, arguing about things, rather than investing and doing the things that we need to do for the future. But also it's exposed our sort of dependence on foreign markets, our dependence on oil imports, and so on. And so, I think there is a certain resonance there, but anyway, it's probably for others to look at further.
Contrary side of that, whilst Germany was deemed to have lost the Second World War, it actually advanced the fastest in the following modern industrialization, because it was flattened in many places, and therefore it had the opportunity to develop with the state-of-the-art technologies of the late 40s, the way I understand it.
Well, I think that's true. Obviously it had a very strong industrial base. German industry had surpassed British industry before the Second World War, for sure. But also, Germany was very important to the Cold War. The fear of American policymakers was Russian control of Germany, the heartland of Europe, and so Germany was very important, as was Japan, because of its proximity both to Russia and to China, and communist countries, both of them. And so you could argue that the US it sort of supported the reconstruction of those countries more so than the UK and France. The UK, as you pointed out, being a competitor until probably 1956, and ditto France. But the French sort of made the decision to be one of the founding members of the European Union and put its sort of eggs in that particular basket. So,
and of course, Germany very rich in coal, which was the primary source of energy at that time. So that was big. Yeah. So, how do we get into this?
How do we get here? We started with Trump.
Right.
I mean, this sort of tariff policy is quite interesting. It does have echoes of the 1930s, and we know economically what a disaster all of those policies were. there is a link to the cycle. So, probably the first person ever to kind of ask why industrial economies go through these sort of phases of boom and bust was an American economist by the name of Henry George, who sort of rediscovered the importance of land to the progress of a society. And he said that, you get these periodic crises when land ownership is unevenly distributed and concentrated in the hands of a wealthy few, which is basically characteristic of all advanced modern societies, which is why we get such violent booms and busts. Interestingly, Henry George also wrote a book with a very passionate defense of free trade called Protection or Free Trade, ? And it was described by Milton Friedman as I can't remember the exact quote, but the most rhetorically brilliant defense of free trade that has ever been written. It was the first book in history to be read in its entirety into the US congressional record. Winston Churchill was a very ardent fan of Henry George, and particularly his two causes. One was the land value tax, which solves the boom and bust cycle, and the other was free trade. And so it's, Henry George identified the cycle, maybe not the timing of it, but nonetheless the way in which it develops, which I've outlined in my book, and also a very staunch advocate for free trade, as was Churchill, and very much against the grain of the new incoming US administration. So it's going to be quite interesting. It does resonate with the 1930s, and things might work for a time, but when the land cycle turns down, these policies will come back to bite us very hard. So it's very much a warning for the remaining years of the decade.
I think that's really interesting. I think Trump should take you on as an advisor, because
Don't know if I do that.
taking apart. Yeah. Yeah. So one of the things that he did mention was he talked about William McKinley, and President McKinley. And I've just written a piece on that, which was released actually yesterday in my year ahead forecast, which has gone out to well, many of you subscribe to so you will have had that.
I'm a subscriber. I haven't got around to reading it yet, so
yeah. So I've gone into great detail because if you look very carefully at what happened, and there is a very clear cycle set. It is, I use the 90-year cycle, and that's two 45-year cycles. If you go back 3 45-year cycles, 135 years from 2025, it's going to take you to 1890. And that is exactly when this Tariff Act came in. So out of all the tariffs that America has had over the years, and there are a lot of them, America is probably, you've always you see America as this free place. It's had more tariffs than anywhere else from, over the years, with the Civil War, this, that, and the other. But it did not work out well. The full story's in the latest market timing report, year ahead edition, that's available to, pretty much all of you that are listening that are subscribing. So have a look at that, because my money is that is going to be the overlay, the timeline of what's going to happen. Everybody backed it when they started it, but the outcome was not good for the Republicans. So,
interesting. Yeah, I suspect that, if the cycle plays out as it is, whichever party presides over a recession tends to get voted out of office. So, should history repeat, you would expect that the Republicans will be quite, significantly wiped out in Washington in the next election. But let's see what happens. The timing of the cycle can vary a little bit. But tariffs are never a good idea. And in fact, Henry George made the very sort of appropriate point that the only people that are benefited by tariffs are, the landowners, because it kind of creates scarcities in an economy in a way that's not very helpful for the broader public, but is very good for landowners. So, we have a real estate man in the White House, so maybe that could be part of it. People who own rental assets, and number of those, and rental assets doesn't mean physical land or and so on, but it could mean kind of parts of cyberspace and other things. they're all kind of in power at the moment, or very influential. So we'll see how it plays out. And as I said, I think the next couple of years will actually look very rosy. There'll be a lot of speculations. Stock markets will surge into all-time highs. Commodity prices should go up. Lots of building going on, probably a lot of employment, and other things. If the government intervenes in a major way to build walls across the southern border and so on. I mean, that's bullish for those communities where they're supplying materials and labor and
Yeah.
finance. So there is a sort of an artificial veneer of economic prosperity, but we are getting to the point in the cycle where things will end, and some of the policies really undermine what will happen and how you get out of it when the cycle turns down. So it's interesting times. I mean, some ideas around trying to get interest rates to a sensible level, and some of the deregulation, some simplification of the tax code. I mean, these are all sort of positive pro-business policies, which I think are a good idea, as long as they're not done for particular interests. They're done broadly and for the people at large. The idea of trying to solve overseas wars. I mean, if he's actually serious about that and managed to do it, I mean, I think that's the idea of a peace dividend is very powerful and could be very good. But then a lot of what is proposed by the administration, and I'm not having a go just at the new administration, there's also policies in Europe and policies in China and other places. These things lead to fragmentation, they lead to non-cooperation, and when you get a crisis, what you don't want is the lack of those things, because we also know in dark times, dark people come forward and propose confrontational policies, and we've seen this particular playbook play out in previous cycles, and hopefully we won't have to go through it again in the future.
Well, there's two sides to that, aren't there? The dark people, as the darker forces, tend to come out and can be seen as a distraction from failing domestic policy. That's the first thing. And then secondly, once you do get a war machine going, it's incredibly good for industrial production. It's inflationary. It kickstarts the economy. And actually, exactly what you said about building this wall, fortifying it, that is classic Keynesian economic stimulation, isn't it, really?
Yeah, absolutely. And you tend to find actually towards the peak of the cycle that the government is responsible for a greater share of GDP, because there's a lot of construction, building for public works. We have at PSE, at Property Share Market Economics, we have a cycle clock which sort of documents the different sort of phases of the cycle and what happens, and building for public works is one of them. And in fact, I've laid it all out in my book, chapter by chapter, which covers different phases of each cycle. So that is good for growth.
That, just tell the audience where exactly to go, so we know exactly what. www.pse.
www.propertysharemarketeconomics.com, which is all one word. So it's a bit of a mouthful, but it's good for SEO, I'm told.
Okay. Right. Okay. So go and have a look at that, because it's good stuff. I've been there. I go there. It's fantastic stuff. So sorry, I didn't mean to interrupt, but I wanted to make sure that people knew where to go.
No, so, I mean, I think this is, we're talking about building walls and building other things. I don't necessarily agree with that idea, but it's good for growth. Potentially, the UK had something similar in the last cycle, in the run up to 2007. The government decided it was going to distribute government offices all around the country, and they become very significant sources of local employment wherever they went. And there's a lot of kind of regional policy and funneling money out into the regions and so on. So it's good for some slightly more quote unquote broad-based growth. But as you saw after 2008, it doesn't last. And when you get a crisis, government retrenches very significantly, and it leaves those outer regions in economically depressed situation. So there is a sort of a good and a bad sides to it, and it gets exposed when things turn down. I mean, actually, one thing I should say, and I can't believe this isn't some kind of grand joke, but the Department of Government Efficiency, or DOGE, I mean, so I think they've, I don't know what the actual task is. I think Trump told Musk and who's the other guy, the Indian chap, that that's the one.
Yeah.
That they that they had to report back on the 4th of July 2026. Is that right? The
Yeah,
250th
yeah,
anniversary of American independence, with a plan to, cut the government size of government. Well, bearing in mind what I just said about the importance of government spending to growth, I think they need to be very careful in what order and how they do that, because it could very significantly undermine what the Trump administration is trying to do elsewhere. So it's going to be interesting. There's a lot of, I think, actually fairly contradictory ideas in that, and it will be interesting to see in what order and how they come about. And I suppose the final thing I'd say on that is that I'm always looking for sort of what's going to trigger the maybe not trigger, but set the conditions for the peak of the cycle. So you get the boom. We haven't really talked about kind of easy money. We'll maybe come on to that in a second. We talked about tall buildings. You talked about the speculative era. We've got the idea that this time is different. So a new administration with very new policies could do that. Maybe, if the war in Ukraine ends and obviously hopefully the ceasefire in Gaza holds, you might get the sense that there's a kind of a peace dividend. Maybe China and America do a temporary deal on de-escalating tensions, etc. Or China hands back Panama to Panama, who says we won't sell it to anyone else. And then the US says, okay, fine, we won't bother you around Taiwan. I don't know, something like that. You might get the sort of idea that it's a calmer territory that induces even more kind of speculative activity, given where we are in the cycle. And then so these are sort of conditions of building up. I've documented all of these things in my book. Interesting, one thing that I have also found that tends to be a feature just before the peak of the cycle is some really major weather-related disaster, which kind of ends up sucking a lot of money into reconstruction and other things, or it pulls some financing houses under because they're exposed to whatever that was. And so I noted with interest that the Californian wildfires are going to possibly be the costliest sort of natural disaster in US history, largely because of the value of the housing that they have affected. And so a lot of insurance companies, if there were any left in California, going to require public bailout. That obviously drains the public coffers of certain funds and so on. And so it's not necessarily the trigger of the crisis, but it sets the conditions of money being a bit tighter than it would normally be. People might be in some places a bit more cautious and so on. It can have a cascading effect. Now, that, from my point of view, is just giving an early sort of warning sign of something that I've seen before in history having a bearing in the run up to the peak of the cycle. So it happened in 1925, I believe, with a sort of major hurricane in Florida. And Florida was, it was always been beset by hurricanes, but it was only in the 1920s that it really got built out. Before that, it was a sort of swamp and so on. So people didn't know about it, but it really affected people's perceptions of certain things. And of course, the peak of the cycle followed a year and a half later. So let's wait and see.
Let me bring something else in on that one as well, if I may. Sorry to interrupt you, but so we've had the fires in California. I was in Los Angeles last week. It's not good. But something else happened 90 years ago. So we got the 29 crash. We went into a recession, depression. We got the New Deal, and then we got the Dust Bowl.
Oh, yeah.
We got, and that actually one of the Dust Bowl peaks, they told them the black blizzards. They were called the black blizzards. Again, in the year ahead report, I documented. But there is a peak, I believe, off the top of my head. There were 3 peaks. One of the peaks was for April 1935. Off the top of my head, I might be wrong. I'd have to look up in the report. So I'm wondering if we're going to see some sort of situation that impacts the crops in the Midwest as well, based on the 90-year cycle. Now, there's another caveat here. Trump's previous tariff policies on things like soybeans and China actually backfired, because all China did was they went off and got those products from Brazil and Argentina, who've increased the production and therefore reduced the stronghold off these commodities in America. So just think about that. So it could happen. It might not impact the crops or the global price of these commodities as much. But I'll just throw that in because you mentioned the wildfires. And insurance has been historically difficult in California because the state had to create there was a state offered. Well, if you couldn't get your house insured with a normal company, the state had to provide something for you, from what I was reading when I was out there last week, and I was there the previous week as well. So yeah, so just throwing that in with natural disasters. Back to you. Sorry to interrupt you there.
No, not at all. It's good. Yeah, no, I think, look, I mean, there's a lot of suggestion, not a lot. There's been some sort of independent journalists who've said that a lot of the fire damage could have been stopped much earlier had the government been more responsive and so on. I mean, you do get these sorts of things. I mean, you had under the Bush administration in 2006 or was it 2005, Katrina, for example, similar thing, very costly disaster. We saw things that we didn't think we'd see. We saw, and there was a lot of widespread kind of neglect kind of identified as well. So now did Katrina precipitate the peak of the crisis? I don't think so, but it did definitely have an effect on sort of public finance and other things, and maybe investor appetite into the run up to the peak of the cycle the following year. So let's see what happens.
Okay, great. So one of the things you mentioned there, we could talk about commodities, China, and I was going to ask you what your views were on the BRICS nations, and whether you thought they, what their potential pathway is. I know several years ago when I met with you in London, you'd had an excellent, outstanding presentation on the Belt and Road, and of course we're much further on. That was actually probably 9 years ago. I think I saw that, so that's half the 18-year cycle.
Yeah.
Yeah, give me your thoughts. You mentioned commodities. We'll talk about China, and then maybe the
Yeah.
BRICS. Any thoughts on those?
Yeah, I mean, sort of, I don't think anyone really has a proper read on China, if I'm totally honest. I certainly don't. I mean, there's only two things I can really say about China. One is that I think a lot of the reporting about China isn't always accurate. I think we tend to want to talk it down more than we should. The second thing is that China does indeed have some very significant problems. I mean, probably not too dissimilar to the problems that we have in terms of its over dependence on the property market as a store of wealth. I mean, that certainly affects the UK, Australia, lots of the US, particularly the wealthier parts of the US. And I think they're trying to change the system whereby basically borrowing money to buy apartments, which people don't necessarily need to live in, is just as pure as a store of value. They want to change that, and they've been trying to do that, to be fair to them, since 2017. It's not a new thing. The thing is that it doesn't seem to be adjusting the economic system away from property, and they've sort of not managed to do it. In the absence of the Chinese model, which was always to have this sort of massive stimulus and sort of depend on increasing capacity and exporting to the rest of the world, which is not so possible with some fragmentation, as we've talked about, and friendshoring and other things, and because China is seen as a strategic competitor. And also because, in the aftermath of the invasion of Ukraine, inflation being what it was, the pockets of Western consumers wasn't as deep as maybe in previous iterations of that. That export model hasn't worked. The government doesn't seem to be wanting to shift decisively to consumer-oriented economy. Because I think it's very difficult. And Japan had the same thing in the 1980s. They tried to do the same kind of process, transition from a very powerful export-oriented economy to a more consumer diversified one. It didn't end well. I think we're seeing something similar in China. Having said that, I don't think that the party can allow growth to be quite so weak on an ongoing basis. And I suspect that what they will try to do is stimulate. The problem is that will weaken the yuan, and they don't want, the Trump administration won't want that. It'll create lots of conflicts and other things, and so they're trying to sort of follow a fairly narrow path. But I'm sure there's a solution coming. I kind of feel that I've noticed a pattern in the Chinese stock market, which I've written to my subscribers about, which leads me to believe that you might have a fairly strong couple of years in the Chinese stock market. Now, that might or might not be reflective of a strong economy, but I think there's something more to be said about that. Now, we talked about commodities. So typically commodities would ride up on the back of Chinese stimulus. So if we don't get that, then maybe some commodities do well, others won't. there's a lot of building going on elsewhere, but it seems that there's a lot of a supply of commodities as well. So maybe prices won't go up all that much across the board. But I suspect that, gold and copper and other things will have a bit of a run, particularly if the US dollar comes down, which I have been expecting for some time. I don't believe this rally will last very long. I think Trump has always been very clear that he wants a weaker dollar. He wants lower interest rates. And I suspect that his new Treasury Secretary, Scott Bessent, will be tasked with sorting that out as his sort of first order of business when he starts work tomorrow morning.
Yeah, yeah, and Scott's got quite an incredible career. Had a career already, hasn't he? With some major players. Yeah, interesting. So, Silicon Valley comes to Capitol and Congress and so on. So, what do you think? Oligarchy, or is it like a real life version of The Apprentice? Is this one of his games? What do you think?
It feels a bit like the 1920s. Didn't he? Didn't wasn't who was the Treasury Secretary in 1921? Wasn't it Andrew Mellon or someone? Yeah, the billionaire.
All I know is that they were talking very much to Andrew Carnegie,
Yeah,
uh,
yeah. All the billionaires were involved.
Firestone. Yeah,
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 yeah. So
and
it feels a bit like that, doesn't it?
yeah,
Modern day billionaires. Well, they are, I mean, billionaires, but the really top industrialists.
yeah.
Um, you know,
And I think, just digressing, but very relevant, for those of you who've studied the work of Napoleon Hill, who is
right.
not
Yeah,
strictly
yeah,
in the financial sector. It's,
yeah,
they write Think and Grow Rich. If you study his expanded work, you can see that he interviewed all the industrialists of the time in the 1920s and 1930s. And he was given that, and Henry Ford was another person he interviewed, and he was given that task. Who sent him on that way? Um, Andrew Carnegie, that's it. He funded it, didn't he? And he said, go and find out if there's a common theme here amongst all these people and what they all do, and see if we can replicate that success story. So that's
yeah,
a little bit of a digression. But if you look, you will see who joined all these masterminds, because that's exactly what Trump is creating. He's creating a mastermind alliance here. Whether they can all work together is a different thing, because they're all leaders. None of them are followers, and I doubt that they're team players. They can lead teams. It'd be very interesting to see what happens. And I have to
yeah.
say, what did Musk do? He put 250 million into Trump's campaign, and what return did he get on that? Was it up 170 million his stock? Sorry, 170
More than that,
billion.
170 billion. Yeah. Now,
170 billion.
yeah, I don't think we should kid ourselves. And I've heard people express on various podcasts, so he's assembling the top team and team of all the talents and so on. I mean, these are very, very gifted and very driven individuals, but very self-interested, and they are making a bet on
Exactly.
Trump
Yeah.
and the administration. And we don't need to put this all on Trump. I mean, his administration, um, for certain, in some cases, regulations or deregulations to suit their interest, to get permission to build stuff here or to try stuff there, and so on, with a view to capturing very significant market share for their companies. I mean, let's not be naive about what's going on. Um, and I wrote in my book. In my book I detail the cycle, but I also try to explain why the cycle happens. And one of the key fundamental laws of economics is the law of economic rent. And that is the sort of idea that location matters, and whoever owns a location basically is in command of the economy, the best locations. But I also make the point that in our new economy, locations might not be physical; it might be virtual. And all of
Absolutely.
these companies, Facebook, Apple, Google, they effectively own digital land in cyberspace. And they're the gatekeepers to the internet, which is the new land where everyone congregates to work, to play, to do business, and so on. And so they are basically the rent collectors of this age, just as the industrialists were in a previous age. And they are betting on a president. And if it would be Harris, they would have done the same thing. They'd be betting on a president to support their economic interest. And the problem with that is precisely the economic interest that leads cycles to booms to busts. I suspect that we'll have a couple of years of very significant boom, but the price of that is a very significant bust. And so what we try and tell our subscribers is, by all means, take advantage of the next couple of years, and here's how we think you can do it. But we'll tell you when we think the party's over, and this is how you stay safe for what's coming.
And if I could add to that, you and Phil Anderson are absolute adept at this 18.6 year cycle, and it's been working like clockwork since 1800, and certainly in the West, in America, and pretty much in Britain, with just the two exceptions you mentioned. But then you also add in the larger cycles. So, for example, 2007, the global financial crisis was the 18.6 year cycle, also coinciding with the 100-year cycle from the rich man's panic in 1907 and the Embargo Act in 1807. The pandemic was the 18.6. So the 18.6 year cycle works in viruses and pandemics and so on. And what we saw there, we get serious pandemics every 100 years. I've documented that several times. And that coincided with the 18.6 year cycle coming in from AIDS and SARS, then AIDS, and then the Hong Kong flu before that. And what are we going to get again? We're getting exactly the same thing. This time we're going to get the 18.6 year cycle coming in, coinciding with the 100 years from the 29 crash. So we're getting this overlay, and this is why some of these events are more significant than others or have a greater magnitude. That's just my tuppence halfpenny worth there. But
yeah,
I think
that's very pleasant.
So, Akhil, do you have a view on Bitcoin? And let's do two things. Let's do Bitcoin and bonds, probably the safest and the wildest. Yes. Two things beginning with B, the two Bs, Bitcoin.
Yeah, I mean, so if you understand Bitcoin and you can buy it and you own it and you know how it moves, I'd say go, by all means go for it, because I think Bitcoin for at least another sort of few months is going to have a pretty strong run. Not up in a straight line, so don't just go in and buy it today and don't expect to have a drawdown of some significant proportions over time. But I think it's going to be up, and then also all the other kind of stuff that goes along with the rising Bitcoin, all the shit stuff as well is going to be, Trump coins and Melania coins and all the other stuff, Doge and photos of cats and all the nonsense that you get. All of that stuff is going to be, people are going to make a lot of money. The problem is actually staying with it when the cycle starts to turn down. Now, so if your question is, do I think Bitcoin is a new money? No, I don't. I mean, it's ludicrous to have a money system based on something that can jump 10% or fall 10% in a day. I mean, it's absolutely ludicrous. Also, it's ludicrous to have a money system based on something that you can't create money, in a crisis, and so on. I can kind of see why some people think it's this form of money because you can't create it. But, the history of the 19th century is one of very violent busts when we were on a gold standard. And one of the problems was you couldn't reflate the economy in a crisis. So if you have an economic system as we do, which is based on boom and bust, for the reasons I set out in my book, based upon the privatization of public value through the land market, then you need a money system that can respond to crises, and therefore you need an ability to inflate the money supply in that situation. You don't get that nearly to the same extent on a gold standard, and you don't get that on a Bitcoin standard either. So as a monetary base, it's not appropriate. It might have a role as a sort of a store of reserves, no doubt. So we're definitely going to have a situation in the coming decades of a more sort of pluralist monetary base. They might have a BRICS coin, which is backed by commodities. You might have the US dollar will clearly play a very significant role. And you might have other reserve assets as well. And Bitcoin might well be part of that. But as a medium of exchange, day-to-day transactions and so on, I think you'll need something else. But as a speculative asset, great stuff for the time being. Now, where it ends in terms of speculation, and this is true of other coins and any speculative asset and collectibles and other things like that, is also linked to the bond market and interest rates. So we should be seeing short-term interest rates cut in the US over 2025, maybe not to the extent that people think they will be, but I do suspect that we will be on a downward trend. I mean, Trump wants it, so I think the Federal Reserve will have to try and give some of that to him, even though they maintain a veneer of independence. But what I think will happen is at some point they will be forced to raise interest rates again. I don't think inflation has gone away in the way that people think, and I think part of the reason for that is a money creation by the private banking system, largely going into speculation, so via the land markets and other things, into maybe capital investment in AI, which actually doesn't have a very significant return on investment, and that will start to push interest rates up. I think that will precipitate the end of the cycle, and the point at which interest rates start rising again is when you should be selling your most speculative assets, because assets which aren't backed by any flow of earnings, such as Bitcoin, can and sometimes do go down to zero. Now, I'm not saying Bitcoin is going to go down to zero, but some of the other things that are associated with Bitcoin might well do. So you want to be very careful with that.
Yeah, I still haven't got my head around Bitcoin. It has no intrinsic value. That's it, as far as I can see. So I just don't understand.
Well, it's. I mean, you could argue that its intrinsic value is in the energy that has cost to mine a coin, which is now quite significant. So maybe that puts a floor under the price. And since it does perform a function, which is to securely store information, as all blockchain technologies do, then it has that sort of value. But it doesn't. And maybe in time it will. That kind of will be seen as a service which has a flow of earnings. It does not yet the case. I haven't really. You're right. I myself haven't really got my head around some of these things, but nonetheless, it doesn't have the sort of astronomical kind of values associated with it by the most converted of Bitcoin zealots and so on. And certainly, as a monetary base, I really think it's not the way that the world is moving.
Yeah, I would say there are three professional people that I know of who seem to have holdings in excess of 150 million pounds just because they bought at the right time, and they are they're kind of regular jobs, professional jobs, might earn six figures a year and that sort of stuff. And
it's been fantastic if you own Bitcoin, and it's very gratifying to wake up one morning and see that your portfolio is worth 20% more. I mean, who doesn't like that? But let's not mistake why that's happening. That's just pure speculation. It's not to do with any investment sort of insight and stuff. And so that means that you can feel perfectly adequate to say, right, I've got enough gains from this. I'm gonna start to put my money into other things and diversify, because these things are very volatile, and we haven't seen how they perform at the end of the cycle. And I suspect that it's not gonna be pretty. Bitcoin might have a role as a crisis haven, but we just don't know. And for the reasons that you've set out, it doesn't have a sort of flow of earnings underneath it. I wouldn't be overexposed to Bitcoin in a crisis, is my view.
I think that's it. I mean, what does Bitcoin have? Well, it has anonymity, and it can transcend borders. We don't have FX.
It has the technology is the way forward. It's the future of the world. Blockchain everything is going to be somehow tied to the blockchain, I suspect, but not necessarily as a monetary asset.
Well, we have been going quite a while, so let's sum this up. Akhil, give us an overview on 2025. Sorry, excuse me, from point of view of our fireside chat.
Well, so today we were told it's the dawn of a golden age in America.
Yes.
I think from a speculative investment point of view, I think that's right. I think 2025 will see some really good opportunities for gains in the stock market, though not necessarily all in a straight line. And I think turbulence and volatility is the name of the game as well. In some commodities, if the dollar comes down as I'm expecting it to do, it will be quite good for crypto and some commodities and so on. It'll be good for the global economy as well. But I've outlined where I think we are in the cycle. I've outlined why I think some of these positive signs in markets are a bit of an economic mirage. I feel that we're fairly close to the peak of the cycle, and that in addition to making money out of these big moves, I think also people should exercise and take the opportunity of 2025 to start to exercise a bit of caution, sell the assets that they want to get rid of at high prices, always a good strategy. Start to build up reserves. And also, really learn everything you can about how the cycle plays out and how the peak arrives and what you do in a crisis, which I try to outline in a book and which I try to outline for my subscribers.
Fantastic. So let's just recap then. Akhil's book, The Secret Wealth Advantage, there, published last year, right? And
2023, actually.
23.
So,
yeah, it seems like a few minutes
yeah.
ago. So that's there. Property share market economics.com, whole wealth there. Go and subscribe to the work there. It's fascinating. You will make returns many times over. From my point of view, markettimingreport.com, the year ahead report is out now. And we're here not just to give you timing on markets, but giving you the tools, what the smart money's doing, what the seasonality, high probability trade setups are. So all that remains for me to say is, Akhil, that time went very quickly. Thank you for a very, very interesting, fascinating session. We've gone way over the hour. Hope you've all enjoyed it. Subscribe to this channel. Subscribe to Akhil's work. Phil, just for those of you who might not know, Akhil and Phil Anderson are big business partners. They own propertysharemarketeconomics.com. Big friends of mine. We're often in this room having a drink of something or another, like you can see on the shelf back there. So subscribe to this channel. Go and get all this stuff if it helps. We are here to help you. Tell us what you think. And thank you for watching this. Take care.
Bye.
Bye-bye. Thank you.